Today we're talking about what you need to know in order to have a successful retirement. For more than 19 years, Albertson Financial has been in the business of retirement planning here in Atlanta. And with me today via satellite is Jack Browne, president of Albertson Financial. Jack, welcome to Atlanta Plugged In. How are you?
I'm wonderful, Anna-Lee. Thank you so much for having me on today.
Okay, so what you're facing, obviously we know you're dealing with the older generations. It's a little bit different now. Times have changed because extended bull runs of the market, along with some significant downturns like we saw in 2000 and then again in 2008. And as we work through 2015, it's questionable if a bull market will sustain. Of course, that's providing a fair amount of uncertainty as to how long it's going to continue. And so many people are nervous about that. So do you think that most people are prepared for their retirement?
In terms of being prepared for retirement, it really depends on where you are in your stage of life and really how much planning you've done. We found the people that have done some planning and done some research on their own are more prepared than those that have not done much planning. The sad fact, though, is that on a recent study, we found that 90% of Americans have $25,000 or less in savings. And that's really not going to be enough to have a successful retirement. Just think about your current lifestyle and how many months $25,000 would keep you living the way you want to live right now. I know that for most people out there right now, if that's all you had, you wouldn't even be able to continue to live the way you're living right now because you'd be scared.
Now that's not just savings, but their entire portfolio.
Not just savings, but their entire portfolio. That's it.
All right, so I heard that you need at least 7 figures to retire. Is that true?
Well, a lot of people might hear those words out there. There's commercials that say, what's your number? It all depends on a few things. The biggest one is, have you done any planning? And the second one is, how do you want to live? Because the more expensive lifestyle that you want to live in retirement, the more assets you're going to need to fund that lifestyle. It's pretty basic. But in terms of having a magic number that you have to reach to get to a threshold and say, okay, now I can retire, there is no such magic number that fits everybody. Everybody's story is different. We've had people that come into our office at Albertson Financial and they can retire in less than a third of that number because their lifestyle is such that they don't need to have an extravagant lifestyle.
Also, is Social Security guaranteed for 20 more years?
Well, the only thing that's going to be guaranteed, as they say, are death and taxes. But in terms of Social Security, I don't think it's going to be going anywhere anytime soon. I think that's just too much of a political hot potato for the people in Washington to try and take it away from the U.S. citizens. There's things that they can do to fix Social Security and provide more funding to it. One of them would be to continue to raise the cap on when people have to keep paying into it. But in terms of being able to count on Social Security to help provide for your retirement, I think you're safe in assuming that there'll be something there, just a matter of how much and how far away you are from your retirement age.
All right, so now we're in a no interest rate environment, which is terrible news for savers. And now it's laughable that interest rates are now less than 1%, which is, of course, great to spur the economy. But if you're looking to retire and save money, it's terrible.
That's right. That low interest rate has just crippled the ability for people to just put their money in the bank and let it grow safely. So now what people are doing is they're putting their money into the market and trying to use the market to chase their returns. Right now, we look back at the Dow Jones Industrial Average over the first quarter of 2015, and we discovered that 2/3 of the trading days, the Dow Jones had a swing in its ending value of triple digits, 2/3 of the days. And at the end of the quarter, all that volatility only added up to a 46-point change. And that's not a very significant change either. So the question is, where can people put their money so that they can both provide a return and also provide safety?
So interest rates are so low, and the Fed used quantitative easing to provide stimulus for the economy, and that did provide the intended boost to the economy. But now the Fed has stopped quantitative easing, and the markets seem to be stagnating with lots of triple-digit swings daily in the Dow Jones Industrial Average, but no real continuing positive increases in the market. So with this kind of volatility, should retirees get nervous as their retirements get close? Or if they pull their money out of the market, do they actually risk missing out on significant gains compared to staying in the market?
Well, it all depends on a few things. The biggest one is, where are you? And where are you in your stage of life? And how do you want to live in your retirement? If you leave your money in the market, then you do have the potential to follow the market gains, but you also have all the market risks of the downside of a correction. In terms of trying to chase the gains in the market, we went back and looked. The Dow Jones in May of 2015 is at about 18,000. We look back and it crossed the 11,000 point barrier in May of 1999. So over 16 years, it went up 7,000 points, which 7,000 sounds like a big number. But the reality is, on a return basis, that's only 3.1% per year to get from 11,000 to 18,000 over those 16 years. What we want people to do is make sure as they approach retirement age that they think about preservation as something that's more important than accumulation. Because once you've retired, it's going to be very difficult for you to add assets to your portfolio and use those new assets that you add to help your assets grow. You've got to be able to protect your assets, and at Albertson Financial, that's what we do. We provide safe money alternatives so that people can both grow their assets and get a guaranteed income for life and not suffer the risk of a significant market correction.
Okay, so you just recommended a fixed indexed annuity. Why is that?
Well, we like these strategies because they provide a participation in market returns. Granted, sometimes these returns are capped to a certain extent, so you may not get everything that the market gets, but you will always participate in market gains when they occur, but you have the safety of not having any downside risk, so that if the market does correct and go down, you don't lose anything. And that's the important thing, is to make sure that you don't lose anything. The other thing that we like about these strategies is they can provide guaranteed income for life. Income that you can outlive the principal. You can get paid until you're 120 or even longer if you live that long and still get your payment every month using one of these strategies. And that's the whole point of retiring, is not having to work. So if you have one of these strategies that providing income for life, you don't have to worry about running out of money because you're still going to be able to get paid.
Jack, thank you again for educating us on our retirement options.
Oh, thank you so much, Anna Lee. I really appreciate the opportunity to meet with you.
Now, this is something we're all going to need at some point in our lives. For a free retirement planning consultation, you can call Albertson Financial at 770-641-7771 or visit their website, successfulretirement.com.